What's good, boys? You know how we do it around here. We're doing this shit in one fucking take. But I needed a monster. I'm going to the gym after this shit. I'm gonna teach y'all some fucking saws that I made that hopefully will revolutionize the way you trade. Again, you're fucking welcome. It's actually the only other thing that's keeping the algorithm from being released is because every time I try to fucking teach that bitch how to trade with it, it just shits itself. It's a discretionary model, so it still requires my input. Jesus Christ. I need to grow my nails out, bro. I feel like such a child opening it up with like random objects nearby, but oh my god, that smells so good. Y'all know that first sip feeling? Oh my god, look at that. Cheers, boys. Yeah, fuck the fucking. Yeah, I'm never quitting that shit. I don't know what the fuck I was thinking. So what the fuck is the first fair value gap theory? Why do I use it? How do I use it? And how can it save you from taking what looked like a really good trade that ended up falling flat, and how we can avoid that, right? It's how I construct my stop losses. It's how I construct my take profits. It's how I transform a daily bias into being an executable trade, okay? It'll also help you for the live streams. You have a whole weekend to study this before we're live again. Because if you know me, I'm going to be honest, chat, I never fucking tell you, like, explicitly buy or sell. It's very clear because I go fucking crazy, right? I'll tell you when I size in. I give you a full thesis, top to fucking bottom. When I would trim, when I would sell, when I would take profit, all that stuff, right? But the execution, that's not on me, right? That's not on me. Because I don't want to control your capital. It's your decision to take that trade or not, right? It's not on me. But if you've seen a single solitary fucking Instagram reel I've ever made, it's very clear when I take my trade entries. It's very fucking clear. So there's no ambiguity behind it. And it also helps you cut losers very quickly as well. It's a very powerful theory, right? It perfectly explained why this happened. We're going to go through this price action specifically, and then we're going to go through some live action price action so we can see, how it's performing and how you would use it in real time and not just a back-tested analysis version. We're going to forward test it with back testing, but obviously you get the idea. So the first fair value gap, right? In a system, you have a pyramid, right? The first fair value gap, let's think about it in both directions. This would work for a retracement or an expansion. Why is my camera lagging, bro? It's like fucking in Syria. It's giving me that Syria quality right now. But come on. All right. I don't give a fuck. So it works for either direction, but I've talked about this on stream before all the fucking time, and a lot of y'all are going to get fucking annoyed that I keep fucking talking about it, but truthfully, it's going to be the most important thing that you learn when it comes to this because it'll perfectly explain the first fair value gap theory. So when you look at a pyramid, the one thing you're waiting for me to finish drawing is the top, right? Everyone thinks the top of the pyramid is the most important. It's just not true. This is the most important layer. And the second most important layer, this. And the third most important layer, this. And you get the idea, right? The same thing is true for the downside. This is a model for the expansion. I'll explain how this relates to price in a second. The same is true for the downside. Obviously, if you had a pyramid like this, right, you get the same fucking general picture, okay? Way worse drawn. Holy fuck. This trading should better work out because I do not have art in my career path availabilities. The general concept is that we move from an external source of liquidity. The pyramid is our internal source of liquidity to another external source of liquidity, right? That's the general concept. When I say the first fair value gap, I mean the first fair value gap that forms after an order block. And you'll see exactly what I mean right here. Take a look. Take a freaking look. So we have a daily bias, right? We have a daily... There's a fucking fly, bitch. Fuck these flies. Fuck them. Fuck, that shit's annoying the hell out of me. I don't know where the fuck they're coming in from. I genuinely don't know where the fuck they're coming in from. All the windows are closed. Our vents don't work. Don't know where the fuck they're coming from. Okay? I committed absolute war crimes on the ants. When our first week of school, bro, there's a army of ants. Matter of fact, I wonder if y'all can see that. I don't think y'all can. Hold on. You might have to zoom in, but there's an army of ants plastered to my wall because I shot them with raid, and the raid was so fucking powerful, it literally like stuck them to the wall. It was our first week of school. What the fuck am I talking about? Jesus Christ. Fuck the flies. Fuck the flies. But we have a daily bias. Got him, bitch. Fuck you, ho. We have... Oh, my God. Okay. Boys, this is not a good start. This is not a good start. I'm trying to do this bitch in one take. This is any good start. Okay, we're going to disregard all this. We made a bias, though, correct? We made a bias. Now the bias has nothing to do with the first fair value gap theory. The first fair value gap theory is for our entry model, right? Now you'll notice that the algo already took a trade here. And again, the algo doesn't know how to use first fair value gap theory. It's the only thing preventing it from being a successful model. Every time I try to teach it, it just takes too many fucking trades. It still requires my input. But if it was fixed, it would be fully functional. So we have an order block here. We have this order block right here from well before a bearish order block that we are about to break structure on, as y'all saw. And how the first fair value gap theory works is this. The first thing you do is you wait for a 5-minute inefficiency to form outside of the external source of liquidity. Remember, an order block is an external source of liquidity, right? It's kind of like a representation of an interaction on liquidity, right? It's a displacement, okay? That's all it is. So when we break structure on it, you'll notice we're going to create a 5-minute inefficiency. You'll notice the algo took a long here because it's fucking retarded. That's what I mean. It still requires my attention. Am I taking this immediately off the rip? Of course not. Of course not. The algo is about 80% right most of the time. However, when it's wrong, that 20%, it's always because of the first fair value gap theory, okay? Which will cause it to get fucked. Literally ass up, booty up, no lube. We're talking 20 straight minutes in the Sahara Desert, bro. It's like hot as fuck, dry as fuck. It's just not good. So what are we going to do? Okay, what are we going to do in a situation like this? We broke structure on this breaker block. We have inefficiencies to the upside. It looks like a great model. I'm not going to show you the left-hand side just yet. I'm not going to show you just yet because I just want to show you how powerful it is just where we are right now. Okay, external source of liquidity. Remember, external source of liquidity, internal source of liquidity, external source of liquidity, internal source of liquidity. That's the entire movement in the market. External to internal, from internal to external. Okay? So we have an external source of liquidity. Remember, you need to understand about all this shit: order blocks, fair value gaps, inefficiencies, supply, demand, all of the concepts, market structure, market state, bias, all this shit. A whole laundry list of shit you fucking need to learn before you watch this video. This is for people who need to clarify the entry model for themselves. Okay? Who already know about everything else, who need to find the entry model, who are watching my streams like, when the fuck did he enter? Even though I make it fucking clear as day when I'm screaming meow on the top of my fucking lungs. I don't know how the fuck y'all miss it. How the fuck I'm sitting here dugging on y'all hoes, fucking hitting the meow, and y'all are like, did he take the entry? Motherfucker, no, I didn't take my entry. The fuck? Of course I did. Jesus. Let's get a fucking cheers, by the way, boys. Let's get a fucking cheers. Oh, by the way, in case you want, here's my Call of Duty code. Okay. Any Call of Duty fans out there that want to use my code? Whatever the fuck. I don't know what this does or how it helps you, but there you go. There you fucking go, bitch. So here is the first inefficiency that formed outside the order block, right? So what we're doing here is we're looking to build the base of the pyramid. We're looking to build the base of the pyramid to see if this base is going to support further build up of bullish inefficiencies. Now notice we already had an order block and a fair value gap, but more importantly, we're in a new external source of liquidity. We have a new breaker block we're working with, so this is what we have to work with. I put us here for a very specific reason, okay? Because there was a classic long entry that was made known to me that I never took, just exclusively because of failure on the 1-minute retrace. So watch. How do I use the 5-minute foundational fair value? The first thing I do is I hop on the 1-minute time frame. I do a 1-minute retrace. Got that fucker. Let's go. Got him. So the first thing that I'm looking for is to make sure that we're validating trend to the upside, right? We have inefficiencies above us. We're going to look for a take profit in a minute based on the same thing, but we have all that shit above us and below us. How do I know where price is going to move? This is our 5-minute mean threshold, the 50% level of the first foundational fair value gap in the system. What I want to see is continuous breaks of structure, more bullish inefficiencies to the upside, okay? If we break structure on this, we're going to move to the 5-minute to see if it closed that break of structure. If it closes it, in my opinion, it fails that fair value gap, and we have to wait for a new fair value gap to be minted in either direction. This is the first fair value gap test to determine whether or not that bias is going to move us to the upside or the downside based on where we are. That's what I use. Take a look. Let's watch. 1-minute retrace. What happens? Nothing yet. Okay, we're breaking structure on it. We're sweeping on it. There we go. We fully broken structure on it. We're going to go to the 5-minute now. This has invalidated this fair value gap. We've actually disrespected the fair value gap all entirely, retracing it. Now, we don't have a new 5-minute fair value gap yet, so we have no reason to find an entry. Okay. There are inefficiencies to the downside and there are inefficiencies to the upside, But again, we don't have the base inefficiency to work with, the bottom of the pyramid to even build out the order, right? Your order is the pyramid, but that can't exist until you have the base of the pyramid. So we do have a new 5-minute fair value up in here, though, right here. You see that? So now we're going to see, okay, are we going to validate to the downside instead? So what we do, using this as our external source of liquidity, this order block right here. So what we do is we draw out the mean threshold of that, and we go back to the 1 minute time frame, and we look, do we retrace on the 1 minute time frame? And yes, we do. So I'm not interested in taking this to the downside yet. We're basically just testing and testing and testing to see which fair value gap is going to be the first fair value gap before we have a chain reaction. Now notice we actually didn't fully invalidate it. We closed over the 50% level of that fair value gap, but we did not fully invalidate it by through retracement. So in this case, you default to retracement, or excuse me, you default to the validation of this fair value gap, right? So in this case, sure, you broke structure in this, but obviously there's no entry. There's obviously no entry. How are you going to find entry in here? Not a lot of inefficiency until we get down here anyways. I would never take an entry off this, especially with a sweep like this, okay? But more importantly, what we see happening here is we're validating a fair value gap. So we'll wait and see if it creates a new 5-minute inefficiency, and it did not. This is all efficient price action. We're still validating this. I'm not switching to a 1 minute. I don't like the downside particularly just yet. I don't like the downside just yet. Okay, the supply is there. I just don't like it. Now watch. We just disrespected and completely mitigated this fair value gap, and we've minted a new fair value gap right here. This is our new 5-minute fair value gap that we've minted. Here's our mean threshold on that fair value gap right there. I draw it out. Now I go to the 1 minute time frame and I look for a retrace. Okay, and just to clarify, the order block that we're using to justify is no longer that breaker block, right? Because we've broken structure over it. Instead, we're actually using this potential order block right here. This potential order block right there, okay? That's the order block we're using to potentially justify to the upside. So now what I'm going to do is I'm going to go to the 1 minute and see if we get a trend and structure validation, right? Something that looks good to both sides. Really a clearance of highs, all of our inefficiencies being retraced. We see that happening, right? We see fair values being minted. The retrace isn't disproving or proving anything. But again, if we switch back to the 5 minute, we're also not making a whole lot of distance. We're not making a whole lot of distance, right? Our entry is going to be somewhere around here if we're able to find it once we break structure over this, right? We have our inefficiency, but we just don't have an extra layer of validation. The order block is always going to precede the fair value gap, okay? Now notice we're coming back down again, and we've invalidated this as well. So we're going to go back to the 5 minute and see if it fully closed over that fair value gap. Now take a look. Take a look, right? There was our fair value gap. Here's our mean threshold. We technically closed underneath the 50% level of the fair value gap, but we did not fully retrace the fair value gap. So again, in this situation, you default to the validation of the bullish fair value gap instead. Okay, it's more important than the 50% level. It's drastically more important. So we're still validating this, but we also created a, we're going to delete the 50% level. It's not important to me. When this happens, I would just prefer it to be retraced and then make a new fair value gap. Or it doesn't get retraced and make a new fair value gap. For example, a bullish fair value gap here, and then we use that one instead. I like to make sure that we have a clear 50% level. This is not clear to me anymore. It's also a hint towards buy side, sell side strength. Now we have a 50% level on this 5 minute fair value up to the downside. So what I'm going to do is I'm going to go to the 1 minute time frame. Do we get a 1 minute retrace? Does it mitigate the 50% level? We're still chilling on the order block, consolidating on the order block. Again, no reason to take it to the downside yet. We're not, the trend is moving to the downside, but we're consolidating, right? We're not making a substantial low, and there's not enough inefficiency close enough to accelerate me into wanting to take a trade on something like this, right? It's just no point. Literally no point. Okay? See, there's no entry, right? The trend, sure, albeit bearish, we're not going anywhere. We don't have inefficiency until we drop to at least the 197 point. That's $1 away. $1 away move, right? No rushing. Now watch. We disrespect this threshold again, and we break structure. The downside does seem to have a little more relevance than the upside. Okay, but we've disrespected that fair value up, in my opinion. There we go. There's the complete disrespect. So now what I'm doing is I'm hopping back in the 5 minute time frame, and I'm looking to see what fair value up still exists. We still have this fair value up here. I'm going to go ahead and just do a 5 minute candle. There we go. We fully retraced out that 5 minute fair value gap. What you're seeing here is it's a war. It's a war to determine which fair value gap is going to be the foundational fair value gap. And a lot of you are going to be really confused why I'm even looking so intensely on this. I'm not. Okay, in a live market, if this happens too many times, I'm not looking at it, right? I wait for my notifications to come in, hint, hint, the algo, and then I'll hop on, chart out the foundational fair value gap, and I wait for my entry. Now we disrespected that 5 minutes, so we're going to wait for a new 5 minutes to form. Now we had this 5 minute. Now it's retraced. So I always wait for the 5 minute inefficiency. You're like, well, you're going to miss your entry. No, this is for high quality setups only. Now take a look. We're not seeing bullish fair value gaps to the upside. What does that tell you about the upside potential of this trade? It's limited, right? Very much so limited. Okay. Let's take a look, right? Interesting, right? We're failing on this fair value gap. This is a higher time frame fair value gap. Looks like we're creating a bit of a sweep here. No inefficiency in either direction to take a trade off of. Relatively consolidated, albeit moving to the upside, relatively consolidated. Okay, still no entry and no trade. And this is all basically stemming from that fair value gap being valued all the way back there. But still, nothing I'd want to take a trade on, just being honest with you. Okay, no trade entry. We do have a fair value gap though. We have a 50% level here. There's our fair value gap. So we'll go on the 1 minute time frame and wait for that retrace. Make sure that we still have a reason to take a trade to the upside. It's looking decent. Coming down a little bit there. Now what we have to do is we go back to the 5 minute time frame because again, order blocks take precedence over fair value gaps any day of the week. What we have to do is now we can slide to our right hand side, our left hand side, and look for order blocks or things that kind of prevented us from moving in that direction in the past, right? This is going to be really important. Important level for price action. And if you take a look, nothing that's screaming out at me specifically, except for one thing, just one little thing. This is a fair value gap, right? This is our fair value gap. This is its mean threshold. So we'll go back and we'll see if that mean threshold is being maintained to the downside. There's really nothing else, honestly, but notice, right, we do have an order block here, okay? This is an order block. We can use these as take profit points, but this order block will create a fair value gap, right? That's what would qualify an order block to be an order block. And this is its 50% level. And notice, this kind of explains the theory. After it's been validated, boom, 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 subsequent inefficiencies, and that's how you could catch a crazy retracement. Right, that's the general concept. So what we understand is that if we ever come back to this point, if we find a long entry and we ever come back to this point, and we invalidate that, that's your cue to get out of the trade. Now, there's no order block here specifically that would kind of lead me to believe that this is a foundational fair value gap. It's not. You could make the argument that it's a breaker block one, so I guess you can do that. It's really not a big deal. As long as you're maintaining underneath of it, not a big deal. It looks like we came close to fully retracing it. We did, and we disrespected the 5 or that inefficient or that 50% level. So we're gonna go back to the 1 minute time frame and see if we can find a trade entry, a trade execution before we fully retrace this out. We'll see if it has power to the upside. Nope, we fully retraced that 5 minute fair value up, and you're still probably like 18 minutes deep, and we're still talking about the fair value up and no move. So you're going to see it happen in real time. It's a literal war. We're exchanging the fair value gaps for the more substantial fair value. So if you look, go back to the 1 minute time frame, it was just a sweep. You have to wait for the closure over the 50% level. You can't just use the sweep. You have to wait for a full closure. You'll notice I created an order block. There we go. Potentially some buy side activity, right? I want to see an order block form outside of the range. I want to see it form as a result of a new supplier demand being formed, because this is just not good enough for me. We're going to go back to the 5 minute. You're going to notice that this fair value gap right here has been validated, right? We validated the fair value gap. It was a sweep on a VI. Okay, nothing absolutely amazing looking just yet, albeit still to the upside, right? Trendline traders are having a blast. This does not qualify for an entry because we did not break structure over the highs. So we're going to go back to the 1 minute time frame. Now watch. In real time, sweep, big break. That was that level. We're going to delete that. This level right here is what we needed to inverse. So what do we want to see happen outside of this level? A fair value gap, right? This is a new source of external liquidity. And it looks like it's just a sweep to the downside. See? So what we're doing here, it looks like we're creating an external source, interacting on an external source of liquidity, right there. And so what we want to see happen is a validation of a fair value gap in that direction. We have this guy right here too. Take a look, right? We have that guy right there too. we have a lot more inefficiency. The downside now, the downside move makes a little more sense now. We have more inefficiency. It's not as bad as it was before, albeit not great. Still, it does exist. Now we're going to go to the 1 minute, or excuse me, we're going to go back to the 5, sorry. We have to wait for the 5 minute inefficiency to form and see if we can get an entry. Bro, I can't get this fly. This fly is fucking annoying the shit out of me. There we go. There's a break of structure. This will create, I always wait for the 5 minute efficiency, and a lot of y'all hate that, but it's just true. It's just my strategy. It keeps my risk tight. It's a good strategy to use. Okay, you can use the 1 minute for the retraces, but always use the 5 minute. I promise you. Promise you. Now, what just happened here, right? We have done two things. The first thing, we have minted a fair value gap. See the bearish fair value up in there? We have also disrespected the 50% level of that fair value gap. Therefore, dominoes are starting to fall, and it looks like we're about to create another fair value gap right here too. So what we're going to go and do is we're going to wait for that 5 minutes to form. There it goes. There's that 5 minute. Now we're going to go to the 1 minute. We're going to throw our 50% level down here, schmink, and now we're going to wait on the 1 minute retrace. Okay. Now it's important we have to break structure on this. That's the 50% level of the first order block out of that range. So we just have to consistently break structure over them. It's very important we do that. There we go. There's your order. Not a lot of time in this day, to be honest. Stop loss going right on that black line. That's at 50% level. Back down to the 5 minute time frame. You could always just wait for the 5 if you wanted to. Taking profit on the structural equilibrium, right? Because this is a bearish confluence down to a structural equilibrium. It's kind of a gross looking system, but max take profit will be on the 50% level of the structure. Better yet, honestly, better just use this right here instead. Okay, that'll be another take profit point too. I like having a lot of different approaches, right? Keep it consistent. No, yeah, okay. A structural equilibrium with that low, and another structural equilibrium with the overall low. So what we want to see now is a break of structure over this level right there, as well as additional breaks of structure, right? This is a potential inversion point, right? We see that potential bearish order blocks here that we inverted. So if we see a bullish order block form away from this, that's not very good. But we've disrespected a foundational fair value gap. This was a foundational fair value gap because it was the one that formed outside of this external source of liquidity. So what I'm going to do is I'm going to delete that now, and I'm going to make sure that we're creating 5 minute inefficiencies and maintaining them. Okay, so there's a 5 minute inefficiency. Now notice, base of the pyramid, here's the second rung. Back to the 1 minute. Make sure we're not just sweeping it out. Boom, see? Just fine. It tried to, but it failed. Just fine. Continuously breaking structure. You can trim on that EQ tap 100%. Boom, we'll trim on the EQ tap. Back to the 5 minute time frame. Make sure we're making 5 minute inefficiencies. That's the most important situation to be in. Risk-wise, you can always just move your stop to the 50% level of the next fair value gap, you see? Right? That's a failure. It's a fill of volume imbalance twice, so I'm going to go and trim on that too, potential order block. If that creates a break of structure that creates a fair value gap, we'll get out. It does not. Buy side is very low there. Those lows did not source a lot of liquidity. I'm happy with this. This looks just fine, okay? Wrist is really tight. We're leaving our runner. We have 15 minutes till market closes. We have another VI here. No other inefficiencies fair value gap-wise, so no other first inefficiencies to retrace. Looks like a big tap and a fair value gap. We'll go ahead and close. Although we have time, it'll pull us into the next day, so we're going to close. So a pretty decent trade to EQ. If you go to the daily buy strategy, you'll see it's a bearish order block, a bearish confluence, to an equilibrium, right, on a bullish daily high. The idea here, not a bullish daily high, but a daily high crossing over, meaning we have a bullish bias. So the general concept here is that we avoided taking longs because we never had a full validation of the upside with a foundational fair value gap, right? We never had that. So this is an example of backtested price action that you can see. Obviously, it's a lot harder to do this in real time, but that is how you find a trade execution and your trade entry. Now, I'm going to go ahead and delete all this nonsense, and we're going to let price action do its thing for a day, and we're going to do it in real time so you can kind of see the battle of it, not just an analyzed version of it, okay? You can kind of see it for how it really is. Now, notice the implicit bias is still going on here. If you don't know about the implicit bias, it's the move the market is making regardless of your participation. Bearish confluence to previous day equilibrium. It ended up making it there. It was a swing move, though, right? Not something I would have wanted to take. it's 100% right. The daily buy strategy is literally I hate to say it, it's just right, and you either use it and you're successful, or you avoid it and you're a bad trader. I just hate to say it, but I believe every trader will eventually need to turn to some type of daily bias that uses this kind of model that we use. Okay. Stuck in EQ, no bias, no trade. Obviously, you guys know my rules with that. No bias, no trade. No bias, no trade. I am going to refresh this though. This is really, really slow price action. I hate dorm Wi-Fi, bro. Give it a second. But the foundational, oh my God, boys. That's so bad. It's so bad. No bias, no trade. There we go. We've moved beneath the daily low. Now what we're going to look for is external sources of liquidity underneath of us that could prevent us from moving higher. And then we're going to chart out their first fair value gaps. And you're going to think this is like super annoying, but it's just what you got to fucking do. Okay, it's just what you got to fucking do. Now take a look. We have an order block here. Where's the first fair value gap that formed out of this? It would be this guy right here. And so what I'm going to do is I'm going to mark out that exact order block. See? Schmink. There's your bullish order block. There is your 50% level on the first fair value gap. Going to be an important level to cross if we want to take shorts, right? Additionally, we have another bullish order block right here as well, and we can chart out this. This is the first fair value gap out of this as well. So we want to cross both of these, but this is included in this, so I don't really need to draw that out. Any other stuff I see? Not really. Yeah, nothing I would really worry about. This is an order block, and this is its first fair value, but we're not even remotely close to that yet, so there's no point in looking at that. Okay? Going back to this price action over here, we do not have a fair value gap. We do not have a reason to take a trade. Now I'll take a look, boys. I actually went a little bit too quick there. We're going to go back a candle or two. We're only going to go back one just so I can go to the 1 minute time frame. But look, here's a sweep, right? This is a sweep. There's your bullish order block. I'll wait for the stupid algo to load. I have it going back like a ton of price action, so it just takes a lot longer to load, unfortunately. There's our fair value up right there. There's your mean threshold. We don't have a lot of inefficiency until we get around here, unfortunately. We do have a lot of inefficiency above this, which is nice, right? We've got a volume imbalance, a fair value gap, another imbalance. We do have some guidance there. Go to the 1 minute time frame. Watch the retrace. I'm obviously not going to take the next 5 minute candle because that's cheating. We already saw it. There it is. 5 minute is closed now. So now we'll go back to the 5 and we have an additional fair value up. We'll go and chart out. I just wanted to show you. Obviously, I'm not going to take that in real time. That fair value up is gone now, right? We have two types of external liquidity reactions, a potential bearish and a potential bullish reaction. This is a bearish sweep. This is a bullish sweep. Which one's going to win? It's all determined based on the fair value up, right? We have an additional bullish fair value up right here. I'm going to draw its mean threshold out like so. Back to the 1 minute time frame. Your entry is probably going to be a fair value up that forms outside of this, if that even happens to begin with. Or we could just be building up for a dump using these inefficiencies to the downside, right? That's how we use daily bias, right? Take a look. Kind of just consolidating. Gonna go back to the 5. We're getting close, potentially invalidating that inefficiency right there. Let's watch. Nope. There we go. Fully closes. So now we'll go back to the 5 minutes, see if that created a 5 minute inefficiency. We're going to do one more 5 minute candle. We're seeing some amount of validation here. We're seeing some amount of validation without seeing a bearish inefficiency besides this little fair value up right here. Do you see how we have this bearish fair value up again? Apologies for the system being just so slow. There's our fair value gap right there, right? So what we want to see is which one's going to win. So we use the 1 minute time frame. We have yet to fully retrace this 5. We've yet to fully retrace this 1. We're just working off both. We're just working off both, right? Let's see which one wins. Okay, this is our new fair value right there. Looks like the downside's kind of winning here. That bearish order block's kind of winning. You see that? There you go. You see that? There's a disrespect. It's a little bit too consolidated for my liking, but we are creating another fair value up there. We'll go and do another candle to see if it fully sweeps. There we go. It's fully disrespected that. Longs are looking better, right? You see how we're building confidence with these setups as you validate and invalidate the 50% levels. Now we have our second fair value gap. This definitely qualifies for an entry. We have a potential order block. You could justify this being your external source of liquidity interaction. You could justify this next fair value gap being our foundational fair value gap, although I don't think it's going to create one. Okay. Again, it's just consolidated price action, so I can't really work with this. Obviously, we're not taking trades in an environment like this. We'll wait for a fair value gap to form. There we go. Oh, okay, you see that fair value gap in there? This is our fair value gap. Watch that 1 minute retrace. Again, not something I think I would actually take because there's just not a lot of inefficiency, but you'll see how the sides are being validated in these directions. Now look. There we go. There was our retest. Clear as day. We're going to go back to the 5 minute time frame. Hopefully the consolidation doesn't affect this. Look at that. See? You see how we just did that? A full validation sequence from a bullish confluence to an equilibrium. Albeit, though, very choppy price action, nothing you would take a trade off of. The implied move is undeniable. You cannot deny this price action. You literally just can't, unfortunately. Bullish confluence, bearish bias up to EQ range. Go watch daily bias, and you'll understand how magical this is. All based off of the fair value validation sequences. Now, I showed you how we validate with them and how we use it, but obviously we didn't take a trade on this. And it's because the quality of the inefficiencies that we had available to us above us were not great. Okay, so it wasn't a good system to work with. You could sit here and take more trades the rest of the day if you wanted to, but that is as simple as it gets, right? The base of the pyramid is most important. Once you validate that base of the pyramid and you create more and more inefficiencies, and you validate them with breaks of structure and respect their 50% levels, you can continuously break structure. That's a great entry as long as you have valid inefficiencies to the upside. Super simple model. We'll do one more example. I'll go and delete all this. You're probably wondering, could you take this to the downside? Yes, you could totally take this to the downside. Bearish confluence under a previous daily low. I would make sure that we at least create that 5 minute inefficiency before you start changing up your mind. There it is. There's your first 5 minute inefficiency. And now you have to kind of flip your mind a little bit because now you have to think, okay, every one of these inefficiencies could be the first inefficiency out of an order block. And if you validate it, it would work against you. And so you literally have to mark out every one of these. See? Mark out all the 50% levels because these are going to be really important. If you break structure on them, that is valid. If you fail to, you are respecting that sequence. So we have a potential bearish order block. We have a fair value up in there. Everything is smooth and sound. It's outside of the external source of liquidity, a sweep over EQ. I'm not rushing to take a trade like this, mainly because the inefficiencies, although we have them to the downside now and they're closer, we are close to EQ range. So I'm not willing to just rush into something like this. So we're going to go to the 1 minute time frame. Watch the 1 minute retrace. There's a fucking fly, bro. Got him on. Oh, let's go. I got him on fucking camera too, bitch. That little bitch. Oh, look at that fucker. Yeah, you can suck my dick. We are validating. We are validating. There we go. You see? Now you probably wonder, why did this just happen? Because we just validated another first fair value up inefficiency. We've broken structure. We're close to EQ range. That's why you see chop-like behavior. Okay? We'll go ahead and skip this day so we can potentially find a better day of price action that we can work with. We'll go ahead and just delete all this right there, and we will go to the next day. Still very much validated to the upside, so we'll go and skip this day. But you can see how we use those inefficiencies continuously in that direction, right? There we go. Oh man, we'll skip this day. It's like lagging for whatever reason, and I'm missing days. There we go. Okay. There we go. So we've gapped over the daily high. The market can do two things. Okay, the market can create a bullish confluence and move higher, or a bearish confluence and move lower. Now, where is our bullish confluence? Well, it's going to be off of some type of breaker block, right? We have two of them here. We have one that could be here. There is a bearish order block, and then we have one that could be here. Okay, two of them. And so we're going to use these. If we create a fair value up outside of these ranges, then we can use that to take advantage of a trade. Now watch. We're going to look above our range. We're going to see if there's anything above us here that also could move price lower. And notice we do have a 5 minute fair value and an order block right here. There is the order block, and there is the first inefficiency, and we'll mark out a 50% level because if we fail on that, that's going to be very important. So now we've charted out basically all we need for right now unless price flies in any other direction. Actually, we might need to do more. We'll see what happens. We'll see what happens, then we'll make a determination. We've broken structure. Notice, you'll see we broke structure on the 50% level of this right here, but we don't have a 5 minute inefficiency, so there's no trade, right? We don't have a 5 minute inefficiency, so there's really nothing I can do just yet. Okay, 5-minute inefficiencies are going to be your most important inefficiency. There we go. Okay, so now we have a 5-minute fair value up. This is gone now. It's been fully retraced. We have a 5-minute fair value up now. It should have updated. I'm not sure why it's not updating. There we go. There is our 50% level. So now what we're going to do to determine whether or not we're validating to the downside. Again, I don't know if I love this trade to the downside just because we have an order block right here. But you can kind of see, I hate that we're in consolidation. I might just skip this as well. We'll go to the 1 minute just to prove my point. But okay, we disrespected that. Now I'm going back to the 5-minute time frame. I'm going to skip some price action. We're going to wait till we get out of this range. This is just brutal. We're just too close to EQ. Not great for teaching. There we go. Outside of the range of liquidity, this is a new, we have broken structure on this breaker block. And this is the first inefficiency that formed outside of the range. So now what we're going to do is we're going to hop to the 1 minute time frame. Do we get a retrace or do we get a sweep? It was a full retrace. Back to the 5 to see what we're doing now. We're just kind of chilling, waiting for a potential new inefficiency to form. We're going to go back to our left-hand side. Do we have any other order blocks? We didn't look this far back. Nope. Looks like we just need to get past this. That is basically all we need to get past. That's an order block right there. That's basically all we need to get past right there. Going back to our price action over here. Again, we have to be prepared for both cases to form in the situation. We have a 50% level on this fair value up here as well. Okay, so what we're going to do is we're going to hop on the 1 minute time frame and see which one's being validated, which one's being invalidated thus far. We'll do one more 5-minute candle. There we go. This has been fully retraced. The 5-minute fair value seemingly won this battle. This looks like it's going to create another 5-minute inefficiency here. It does look like it will. You can always wait for the retrace. Okay, validating back to the upside. Now what I'm going to do is I'm going to go to the 1 minute time frame. I'm going to see if we can get a retrace. The first foundational fair value up is where I want to position my trade. I want to see if we get a retrace around here. That's what we're looking for. Okay, see how it's now validating to the downside. Going back to the 5 minute. Boom. Clear respect of that 5-minute fair value gap, right? And then you can target those inefficiencies to the downside if you'd like. This is pretty solid in my opinion. Here is the trade. Okay. Pretty short. Again, not something I'm sure if I would even take. Not something if I'm sure I would even take, but we'll go ahead and simulate it. This price action is not optimal for recording, but you know, it is what it is. There's our EQ. Got to be careful of that. Going to be a take profit consideration point, as well as this this fair value up here and this fair value up here. Both are fair value gaps that could prevent us from executing trades. 1, 2, 3. Take our contracts. Max take profit on EQ range. Understand that if we reject on one of those fair value gaps, we didn't lose a trade, or we didn't. This is not what you should expect price to do. We shouldn't expect that. That would be bad. That'd be very horribly inefficient. The goal is to use our fair value ups to trim, right? We just take what the market can give us in these situations. You can always wait for an additional fair value gap to form on this 5 minute. That's always going to be a really solid entry model as well. Like that's going to be probably the most optimal. This is just brutal. Again, got to wait in the full closure. I don't know if I fully had no, not in this situation. I don't even know where my stop was supposed to be at. Whoops. We didn't have a full inversion of the fair value up, so I'm not mad about that at all. You would use the 1 minute tool to retrace, and then we have our fair value. Whoops. We can go ahead and delete this now. It's kind of just in our way. Make this a little bit more cleaner. Here's the bearish order block. We filled the VI. There we go. We are probably going to take profit right here. We disrespected the first fair value gap outside of this order block right here. That's pretty good. We did not create an additional fair value gap. We're breaking structure on that first fair value gap. There we go. Solid. Stop loss is firm now in here. There's our firm stop loss back on that fair value gap. We're going to trim on EQ since we already passed EQ. At this point, we have an additional fair value gap. So understand this is the first fair value gap that formed outside of this sweep, right? So we want to make sure that we break structure on that. If we fail to do so, we will trim. We fail to do so, so we will trim. Okay? And ultimately, oh, okay. I did not expect that. Ultimately, it'll be, and this might have been news, honestly. That landed at perfectly what's it called? An hour before the market. It might have been news. We'll go ahead and delete all this. We'll go ahead and get to fresh price action. That was a pretty bad execution on my behalf. It's just super consolidated. But still, you can see how we use that feature to our advantage there. Go ahead and skip the rest of this price action. There we go. New price action, fresh price action to work with. Hopefully we can get a trade execution. Now, where are our external sources of liquidity at this point? Well, we have really nothing to the downside until we get down here. Really like right here. Matter of fact, looks like we got close to accessing that. Above us, we don't really have a whole lot either. Don't really have a whole lot to work with. Back to EQ range. We're going to skip a couple weeks of price action here because I just can't deal with this. There we go. I can't deal with unteachable price action. Just terrible. And it not only is it unteachable, but it's literally untradeable in a live market. Hopefully this is going to look a little bit better for us here. Here's our next day. We're going to wait for all of our indicators to load in here. It's so far behind. You're going to load. Really hate their indicator for this. Made me do this every single time just to get it to work. Okay. So we've gapped below this previous daily low. We have a 1 hour order block right here. So in this case, we have a bullish confluence right here. We also have a bearish confluence right here, right? Bearish breaker. So what we want to see is a first 5 minute inefficiency. That's all I care about. I'm not taking trades on anything else. First 5 minute inefficiency. There we go. There's a break of structure. No 5 minute inefficiency. No 5 minute inefficiency. No 5 minute. Chilling. Chilling, bro. Nothing here for me. Unteachable, bro. This is so frustrating. Okay, so now we have our first 5 minute inefficiency right here. Horrible like trade, like literally the worst type of trade. Going to the 1 minute time frame. See if we get a validation on this. Nope, disrespected that. Back to the 5. I want to see a new retrace, or I want to see it not fully close that, or a new fair value gap. It did fully close it, so we would wait on a new fair value gap, a new foundational fair value gap. Since that fair value gap has now been fully retraced, you would wait for a new one. And might get one here. Nope. We do have one to the downside now. We've disrespected. Looks like this is our bearish confluence, if it exists. This is our bearish move. There's your 5 minute 50% level. Now we go to the 1 minute to watch the retrace. Do we have inefficiency to the downside? That's the next question you have to ask. Not really. A bunch of consolidation. That's just, I might skip some more price action here because it's literally impossible to teach like this. But we'll go ahead and just let this run. Yeah, we would have been chasing that all day. I'm so glad we just let that run. Okay, this is the same breaker block that we're using. Okay, this is the first fair value gap outside of the breaker block. We will draw a 50% level on the fair value gap. Now we go down to 1 minute. The only reason I do that is so it doesn't get lost on the time frame. Okay, wait for the validation or the retrace. Looks like it's validating so far. Nope, there's a retrace back to the 5. Going back to the 5 minute time frame. Either waiting for a new order block or a new fair value gap. Okay, validated last minute and broke structure, so now we have to wait for the next fair value gap. You're probably like, oh, this is your entry. Could be. Totally could be. As long as we have those inefficiencies, you're solid, man. You're solid. Wait on that retrace, though. There it is. There's your entry. Back to the 5. Algo is probably right in the situation. Target-wise, got to make sure that this bearish order block does not create an inefficiency to the downside. Got to make sure of that. We also have a lot of target to the upside, a lot of overnight gap. So we'll let this play out. There it is. Bread and butter, baby. Bread and butter. Super simple. Super simple. This is, again, still bad price action, but still better than consolidation. You can see how we use the validation to our advantage there. Very simple process. And watch where our just final take profit would be. You'll find areas where you saw inefficiency form outside of the range. So here, this is as far as you want to take it, is to this next fair value, right? That'd be your next target, or other liquidity sweeps that are in your that move against you, right? So this would be another order block that we're coming to. External source of liquidity, internal source of liquidity, and watch, right? Now it could happen well before that. Here's a 5 minute, boom, 5 minute fair value gap. Didn't get retrace, so you're fine. You keep this trade down. Wait for the retrace. Could be interaction on some external liquidity there. You probably just trim here, honestly. Yeah, 100%. Too consolidated for me. Yeah, you're out at this point for sure. But still, right? You saw how we used that theory to validate this move. That's how we flipped our bias. We were consolidating, we flipped our bias. We'll do one more day. Just make sure it's really foolproof for you guys. Okay, next day. Deleting all this nonsense. Okay. This looks good. A lot of inefficiency to the upside. Oh my God, a lot of inefficiency. Whoops. A lot of inefficiency to the upside, right? A ton of inefficiency to the upside. So we have to wait for the 5-minute fair value up to form outside of this breaker block. There it is. Another good break of structure. We're going to go to our left-hand side, look for order blocks in our, or moving against the grain here. We do have this guy right here, but it does not have a fair value gap, right? So we have to be careful around this area for that sweep. So we use the 1-minute time frame. We'll use the 1-minute time frame, throw our 5-minute inefficiency there, use the 1-minute time frame, make sure we don't got a sweep action going on. Retrace causes a break, so we'll wait for a new fair value gap, unless it didn't retrace it fully. It fully retraced it, so now we're going to wait for a new fair value gap or flip our bias. Okay. Doesn't look like we're getting it. There we go. Probably going to validate to EQ range to the downside. No trade here for me today. Okay, too consolidated. But there it is, right? And that was all based on that inefficiency reaction. We had some inefficiencies in there. We'll go ahead and wait for a clean day. I want to show one last clean day just so we can really drive this point across. There we go. Delete all that. We gapped over the daily high. Okay, there's a sweep. We have no inefficiency to work with yet, so there's no trade. There we go. Now this inefficiency could be the first inefficiency out of an order block. We might have missed it. Oh, it looks like it was. Yeah, it was the first inefficiency outside the order block. So this one definitely did count in our direction. You could wait on a 1-minute retrace, but we're getting close to this breaker block anyways. So we're going to just play it safe and just wait. It's that previous daily high anyways. And it's already down to EQ range, so I'm not taking this to the downside, right? Not taking it to the downside. Not my personal favorite type of trade to take. It's going to stay anywhere in between here. Maybe retrace some fair value gaps, but it's going to stay between EQ range and previous daily equilibrium. Did retrace them and then went right back to the previous day equilibrium. What am I going to do? What am I going to do with that? Here is our bearish order block. It's also a breaker block and a 5-minute fair value gap inefficiency. Boom. Going to the 1-minute time frame to watch for validation. No validation. We did fully retrace it, but did it create a new fair value gap? That's the next question. Actually, it didn't fully retrace. There, it kind of did. I can't even tell. Literally, don't even know how to. It's gone. Yeah. Okay. Gotta wait for the 5-minute efficiency to form. There we go. There's your 5-minute efficiency. Draw out your 50% level down to the 1-minute time frame. Find your validation. Nope. Fully retrace back to the 5. I know it seems tedious, but this is how you get out of bad trades. Literally, how you get out of bad trades. Now we're close to potentially an order block here. We'll see. We'll see what happens. I have another video coming out about these in a second, very, very soon. There's a new 5-minute fair value gap and another retrace. Okay, foundational fair value gap and the break. We'll see what this interaction on this order block does. Wait for the retrace. This is validating. Yeah, this is good. Looking good. See if we can find an order. Kind of consolidating in the order block. That might be it right there. A little too consolidated for my liking. Might wait for it to come up to those fair values a little bit more. We'll go back to the 5. It's a little bit too consolidated for me. No entry, but you got to use that 1 minute. Got to use that 1 minute. Makes sense. We're on an hourly order block, so we're kind of collecting that liquidity there. There's your break. Here's potential order fair value up in there. Does not create the fair value gap, but it is validating our fair value gaps. Again, I'm not sure if this is something I would want to take just because it's so consolidated. This video has just all been consolidated, so it's really frustrating. But there we go. So these have been fully retraced now, fully retraced, and we created a new 5-minute fair value up down here. You can see how the tides turned completely. We weren't willing to go to the downside. The bias flipped. Now it's going to EQ range completely, right? It's going to use those fair value ups, continuously validate, invalidate those structures. We have a breaker block right there. We finished on the structural equilibrium. Take a look. Here's our EQ range. Boom. We finished on the structural equilibrium. There was an implied move there, whether you saw it or not. New 5-minute fair value gap here. Nothing I want to take until we break structure into these lows. Oh my god, this price action. Literally the worst. Literally the worst. We're going to skip. We're just going to have to skip because I don't know how to work with this. Like I said, it's all raw. This is all like just the reality of it. There we go. New day. New day. Hopefully some better price action. I'll delete everything we have. No buys, no trade. This is brutal. Brutal. Okay. No trade. I don't want to take anything on EQ range. Okay. Okay, so we have a bias now. We have our first fair value up outside of the range, right there. I want to see an additional fair value up form just because it's a breaker block. So what we're going to do is we're going to go to the 1 minute after we look for inefficiency to the left-hand side. Oh, we certainly do. We have a ton of inefficiencies to our left-hand side to retrace, and I mean a ton. End of the order block, fair value gap, volume imbalances, just a bunch of good stuff here. Solid trade, solid trade. Delete this. This is retraced. And now what we're going to do is we're going to go to the 1 minute time frame, make sure we get that validation, and then you find your entry. There it is. Off the 5 minute time frame, we'll see how far it goes. There it goes. Probably take profit on that VI for sure. If you're on your 1 minute time frame. Boom, look at that. Still a second entry you could have gotten. Trim on the VI, just running through this overnight gap. See how we use that to validate? Very simple. It's just crushing to the downside. I mean, come on. Super simple. This is how you can determine whether or not the dominoes are going to fall. What a good way to end the video. W way to end the video. I mean, look at that. Like, it's literally perfect. Like, right on the dot. That's all it is, right? Super simple strategy. Hopefully it made sense. We had a little bit of consolidation in there, but if you stuck it through, you definitely learned something today. That's it. I'm not going to drag it out any more than I need to. Cheers.